Wall Street just kicked off a major institutional pump, and you can see over here on the Bitcoin weekly chart a massive green candle towards the upside, and more importantly a break of structure, finally breaking that major downtrend which we had for the last couple of months. And it looks like now we can finally say the next higher low has been confirmed. Bulls have chosen to be victorious, and we have our direction on Bitcoin, which means the entire crypto market and narrative will start to shift now. So we can start to look for new trade ideas and plans. And I'm going to show you a whole lot of evidence of what actually took place within the markets. So make sure that you stay through until the very, very end. And without further ado, let's get straight into the show. So looking at the weekly chart, this is exactly what I've been focusing on over here, is the supporting trend line. It got front run. We never quite went deep into the order block level, but we tagged it. We reclaimed above the 21 and the 200 exponential moving average, which is the yellow and the white. And consequently, we had a major impulsive move towards the upside. But what now? What next? Well, ultimately, I think the best thing to do is to focus on the prior month's range high and range low. So you're looking at the May high, May low, and that's marked out by the pink levels. Now you can see that price action basically deviated below the May low, which was this area over here. I'll draw it in for you. So deviation, look at the pink lines. These are the pink lines over here. We deviated the May low, came back into the range, and now I'd expect nothing different to happen on the top side. Looking for a probable deviation over the top side over there, and then eventually we'll probably come back into this range for a little bit longer and form what will be the next higher low in a couple of months' time. So that is in a nutshell what I'll be looking at for Bitcoin. Those levels, to give you the exact price zones that I'm focused on, is going to be 29,853. Mark that level off on your chart. That is essentially going to be the top of the May candle, and then the May bottom is going to be 25,811, and price is stuck within that range. And that's where all our trading is going to take place, right? So you can see right now, we're kind of coming, if that is the range, we're coming into the range quarterly. So basically that serves as a little bit of resistance, but it shouldn't be too much for the bulls to take care of, since they have a lot of momentum over here and the bears are starting to capitulate out of the market. Not only do we have that massive move, but it's also been supported by the volatility. So you can look on the lower chart over there. There's my head in the way. There you can see on the bottom band over there, any time that the volatility indicator came into this zone and then started to tick back up and move out of that zone, it was met by a major move. Each time it resulted in a move towards the upside of more than 100%. And if the move happened to the downside, it was around 50% drawdown, meaning that if you're in line with the trend, right, the trend is so far up and you had your pivot levels correct, which we focus so heavily on the show for the entire week, saying because it's going to be a big move, you have to be really tight on your entries and know exactly where your pivot level is. We now have that volatility ticking on towards the upside, which supports the notion that this trend will likely continue. Next, we also have a confirmed breakout of not only the falling wedge pattern over here, but it also forms part of a greater cup and handle. This is the biggest cup and handle formation that we've ever seen within Bitcoin. And it is also an inverse head and shoulder formation, which I'll show you on another chart that looks a little bit cleaner than this. But nevertheless, your breakout measured move could potentially take you all the way up to $44,835. That is an enormous monumental move. So what does that mean for you as a viewer? Simply put, it means you want to continue to focus on those pivot levels. I'm going to give you the pivot levels on the lower time frame on the daily chart. Focus on those levels and make sure that any pullbacks that come towards that zone are going to be buying opportunities. Unless that level gets lost, it's a buying opportunity, and bulls have now taken back full control. So this is what we're looking at over here, the breakout of the cup and handle. Any pullbacks you can imagine, if it comes a little bit lower towards that 26.7 level, that's going to be an opportunity to get long on Bitcoin. And you can see we also looked at the divergence which was happening between Bitcoin and the stock market. And I said eventually there's going to be a convergence back towards the mean. That may mean one of two things. It might mean that the Nasdaq and the S&P 500 come down a little bit and Bitcoin comes back up to catch up. And you can see that's exactly what took place, right? So both the Nasdaq and the S&P 500 have started with a minor pullback, but Bitcoin played major catch up and had a big pump towards what we called the mean reversion line over here, which is the midline between the stock market and crypto. So what does that mean? That's led to an enormous breakout across the market. Bitcoin dominance is still absolutely soaring, and altcoins are trying to catch up. Some of them are really performing well. You got CFX, you got CHT. I don't even know what that is. You got Flow, you got 𝗕𝗵𝗪. So you can see the risk appetite within the market is still there. If you want to see what these coins are, this is the Banter Bubbles chart. Click on it and basically you can enter into the chat box over there. You sign in using, here you go, using your Twitter. So it's very easy. Continue with Twitter and in you go. And basically it takes you through and you have a chat box, right? You can see exactly why that coin is pumping. So go play around in there, have fun, and let's continue. Looking at the stock market though, what's led to the majority of the rally within the stock market? Well, it's been big tech versus the rest, right? So big tech, you can see 53% up. And then if you look at the rest of the S&P 500 is only 11% up. And then the remaining 493 companies is basically zero. So they haven't moved at all. Basically what that signifies is if you just take the tech sector, that's been the resultant force which has lifted the stock market overall 11%. So that means if you are cautious out there, if you're a bear out there and you're worried that the market is still going to crash and you can't handle this climb of the wall of worry, your best thing to do is map out Meta, Amazon, Apple, Microsoft, Google, Tesla, and NVIDIA, because those are the main stocks that have been driving the stock market. And make sure that you watch those closely. If you start to see any of those turn back over, that might be enough to start to turn the entire stock market down. And we know the correlation between that and crypto. All right, if you look at 𝗕𝗏𝗺𝗏 over here, he says Bitcoin versus the S&P 500 since its all-time high. He's got 3 major points, which I find very well thought out. Both breached the green support level. So here's the green support level, fell below that support level. Then second, both formed a head and shoulders bottom below what now is the resistance, is the red zone. So you got a head and shoulders on the S&P 500. And you have a head and shoulders on Bitcoin, which lines up with what I just showed you on the cup and handle, right? It's a similar formation over there. And then you have third, both have now broken above the short range. Only Bitcoin has now tested the breakout level, suggesting that basically we're looking at a lot more potential upside if this head and shoulders formation does play out. Guys, take 1 second out of your day to smash the like button over here, get the video content out there, and then let me know in the comments, what do you think over here with regards to the cup and handle formation as well as the head and shoulders? Is this something that you as a potential swing trader or investor are looking to play within the market? Have you got your entry yet? Let me know if you're in or out the market, and then I'll try and help you guys out if you're out the market, where to find those entries. So what was this major catalyst or the pump that caused this entire move? It's something that we did cover early on in the week, and it's just been a building story that continues to go deeper and deeper. So just in Citadel, Fidelity, and Charles Schwab launch a new crypto exchange platform, EDX Markets. I mean, well, it's backed by these guys. They didn't launch it themselves, but it's EDX Markets. EDX Markets is essentially going to be almost like a brokerage, right? They're not going to actually hold the coins, but they're going to provide the medium in which those trading exchanges can take place. So if you look at what's actually happened over the last 2 weeks, it's been pretty monumental. We had BlackRock filing for a Bitcoin ETF. We had Nasdaq launching crypto custody services. Deutsche Bank, which seeks crypto custody service. Usually after they seek a crypto custody service, they will then start to go deeper down the rabbit hole and maybe file for an ETF. You got Soros Fund Management saying that crypto is now here to stay. And then again, what we just mentioned is the launch of the Citadel, Fidelity, and Charles Schwab crypto exchange. So the institutions are here to stay, and it seems like they're FOMOing in very quickly. And it was all led by BlackRock, right? Which is, of course, probably the biggest institutional investor in the world. As soon as BlackRock filed for the Bitcoin ETF, every single one of these guys within a couple of days started to do exactly the same thing. And look at that, BlackRock with $10 trillion. This is a nice meme over here. You got the wall, which is the SEC, starting to crack. Are they going to deny BlackRock such a massive influencer within the space? Well, it's probably unlikely. And when that wall cracks, all that flow of money is going to go into Bitcoin. And then who knows, maybe later it will actually start to flow into the altcoins because BlackRock would need to override the SEC in this situation. And it could lead to some interesting events. So if you have a look at a lot of opinion pieces over here, basically they're saying drown the crypto native exchanges in lawsuits, generate fear around them, and then let traditional financial vultures swoop in. So that's kind of what's happened, right? It almost makes you wonder, was all of this actually coordinated all the way back from what happened with FTX? And you look at the ties to the Democrats, and then you go from that into the court cases against multiple different exchanges. And then now all of a sudden this happens. It just seems like it's very coordinated and too much of a coincidence. And Andrew says the same thing over here. He says BlackRock Bitcoin Trust will be approved very quickly. That's going to be followed by Fidelity. And then it's going to be a whole host of others. This was all very coordinated, and I think it was coordinated as well. Let me know in the comments, what do you think? I mean, you might need to put your tinfoil hat on for this one, but the conspiracy theorists seem to be right within time, right? So they're always wrong in the beginning, and then within time, they are correct. And if you look at Preston, also a very, very smart guy over here, he says the same thing. He says, how can't you think that this entire past year was a giant inside job coordinated by the Wall Street parasites and the government regulators so that they could play catch up to crypto? And this emphasizes the point that it's more important now than ever that if it's not your keys, it's not your coins. If you do have crypto sitting on exchanges and you know you're going to be holding those positions for long periods of time and you're not going to be trading those coins, why not just move it onto a hardware wallet, guys? Just move it onto a ledger, keep it safe, protect your wealth. I showed you yesterday as well that diagram whereby it shows where the majority of Bitcoin lie and what a massive share the exchanges hold, right? So if you're leaving all of your Bitcoin on an exchange, you're at risk. You never know what sort of cards they could pull, and that could be one way that they could get your crypto. So be careful with that. So speaking about this EDX markets, well, if you look over here at the Cointelegraph article, currently the coins that they've chosen, which is pretty interesting, they're going to be supporting the trading of only 4 cryptocurrencies, which is going to be Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Always Bitcoin Cash somehow finds a way into these things, and it really blows my mind how that happens. But could it lead into other coins? Well, it could potentially at a later stage. We first need to get through the SEC. So if you look over here, there's our little bald ass SEC chair. Why don't you come down here and tell BlackRock about how crypto is full of unregistered securities? And I just find this such a funny meme, and that's exactly it. So will BlackRock overcome the SEC and Gary Gensler? Well, hopefully they get him overthrown and crypto passes the benchmark as not a security and more as an asset or commodity. And therefore, that will obviously make things a lot easier for us. Otherwise, most of those altcoins could still potentially trend down towards zero over time. So what will happen to Bitcoin if all of this flow of funds comes into the market? Well, if you just consider the pension funds and you have a look at this tweet from Adam Cochran, you can see that the entire crypto market could potentially go up as much as 15x from here. So the market cap overall is still pretty small. And that's just the very start, right? That's just the beginning. So globally, there's about $60 trillion worth of pension funds and $250 trillion in private retirement savings. Funds put around 3% of that into gold, 20% into alternative assets, which brings it to a total of 23%. Crypto has a 1.0 to 1 value to ratio, cash ratio currently. So if even 0.5% of that 23% went into crypto, the market would straight away 15x. So you can imagine, especially with altcoins being so heavily hit, if the tides do start to turn and somehow you can overcome the regulatory scrutiny of the SEC, then potentially you could see altcoins doing much more than that 15x. So it is definitely noteworthy. This is a big pivot point within the markets, a major transitioning point, but I want to emphasize that this plays out over a long haul, right? This is not, although there's a lot of excitement right now for the bulls, basically immediately buying the news. Usually it's a buy the rumor, sell the news type of thing. But when the news comes so suddenly, sometimes it's a buy the news event and then slowly people start to sell out, getting bored. So that is something you need to be cautious of as well. And I'm going to show you exactly what happened on another chart previously around Bakkt, which was a big institutional investment platform as well. So if this does lead to altcoins, then this is what you'd expect, right? So far, the market cycle is playing out the way that you'd expect, in the sense that Bitcoin has absolutely stolen all of the thunder. The flow of money moves into Bitcoin, causing prices to surge. That is phase one. Then you have a phase overlap where some of that money flows into Ethereum, but it struggles to keep up with Bitcoin. Ethereum goes back and forth with Bitcoin, and then eventually that will start to outperform it. And then you move into the ETH cycle, then the large caps, and then finally full-blown alt season. So this is not the play yet, but it is something that you probably want to print out and put on your wall. Always keep it in the back of your mind's eye, because the chances of the cycle repeating is very, very high. It's much higher that it will repeat than that it won't repeat and that all the altcoins are going to die. Therefore, you want to keep an eye out on this, and the real money is ultimately made in the altcoins and the alt season. Next, where are we within the cycle? Luckily, we can use the charts to kind of guide us objectively, as opposed to being too opinionated and subjective and caught up in emotion. And if you look over here at this chart, we finally hit the first target over here, which was the 0.25 level of the range. This is on the ETH BTC chart. Strong downtrend over here, broke below the mid-range. This is our main range, right, in the sense that we caught with our range high over there, range low over there. This has been the mid-range. We broke below the mid-range. We came into the range quarterly. That level has been tagged. Expect that there will most likely be a bounce over here, which means in the very short term, you could see Ethereum outperform Bitcoin temporarily as it pushes up into this trend line over there. Then we're going to be careful again when it comes into the trend line, and then watch that level. You can imagine, right? A lot of people are caught off guard with the Bitcoin pump, which means they'll be sidelined, and people don't want to buy prices higher, especially when it happens quickly. The psychology of a human is an interesting thing, right? If you saw prices at $26,000 yesterday and suddenly in one candle it pushed to $29,000, you're less likely to want to buy that. Instead, that person would rather look into other coins like Ethereum, for example, which you can see as being mentioned as one of the coins on this new exchange. And therefore, it lines up with what the chart's showing, right? The chart is showing that you are coming into support level, and there is a possibility that Ethereum bounces in the short term and outperforms Bitcoin temporarily. So you see a push up over there. Watch for weakness. If that weakness takes place, expect that you're ultimately going to trend down towards the range low support, and that is your ultimate buy zone for Ethereum. This will obviously translate well into what the rest of the altcoin market is doing. So we'll need to look at that as well. And to do that, we can just look at total. Now, it is definitely noteworthy to mention. We said that expect total when it pushes up into the mid-range over here, which as a percentage, this is total 2, gives you probably about another 5 to 6% on those coins. Then you can expect also a rejection from that level. Again, this is just pure TA because you're coming into the mid-range zone over here, and you're expecting you're probably going to form a lower high, and that's where you want to take some of your profits. That lines up with this chart, which I just showed you on the ETH BTC, suggesting that if it bounces off these 0.25 level, it will also give you a couple of percentage points to the upside. What about Total 3? Total 3 is where the real degen coins lie. So Total 3 came into a major support level. That was our prior range low. You can see the kind of double bottom formation. So tag that level, and now we're looking also same thing for push up. And it shows you the risk appetite is not as high in the degen coins because you still got, as opposed to Total 2 with a 5% move up, you got almost a 9% move up before you hit your next major resistance zone over there. So what are some of the risks and concerns involved with playing this whole narrative around institutional FOMO? Well, if you take it straight from the horse's mouth, there you go. That was a pun. Then he says, with all the news about legacy incumbents opening up shop in crypto, I think it's very important to remember that this is not necessarily something bullish for short-term flows as much as it is for the longer term. So exactly what I said. In the short term, very, very short term, as in like as the news hits, people are super hyped and everything. Big pumps leads major to an illiquid market, right? Big move to the upside, inefficiency candle, which we know oftentimes gets retraced. And in the long term, this will actually play out as very good. So he says, circled on the charts is when Bakkt began trading. Now, Bakkt was, I think, all the way back in 2017 or 2018, a very, very big institutional play where institutional investors could get exposure and access to crypto. So he says, that being said, something that would send price in the short term with speed would be the actual approval of the BlackRock ETF. So he's basically saying his theory that this could happen. This was Bakkt, the announcement of Bakkt, big push up, announcement of Bakkt, and then basically price just bled out. Yes, this was an unnatural candle because that was because of COVID, Black Swan event, but this is still a pretty big drawdown. I think this resulted in the region of, let's just look at price. So down from about $9,000 to about $6,000 without COVID basically means that you had a major drawdown around 30-40%. So could this take place? Well, it's a real possibility unless there's an actual approval of BlackRock ETF, which comes quicker than most anticipate, right? Most are looking at in the region of about 200-ish days, which is around Q1 of next year for the approval. But if they surprise us and it comes sooner, we'll expect another guard candle straight towards the upside. So let's look at the actual price action and the charts and see what's going on in the shorter term. We're looking at the 2-day chart over here using the Ichimoku cloud. We said we're coming down into the bottom of the cloud and you really need to start bouncing off that zone soon. Otherwise, it could signal trouble. Once you have a big candle and it reclaims anything above the top side of the cloud, you more than likely have confirmed your next higher low, right? So you have your ultimate lows here. You have your higher low from the USDCD peg bounced off of that level. And this would be the next higher low. I also said what you want to see is the green. This is what we covered, I think, yesterday or the day before. You want to see the DI negative, which is indicative of how much control the bears have within the market. You want to see them lose momentum, right? Because they've been pushing towards the upside, showing that they have strength. You want to see that come down. And then you want to see the DI positive, which is indicative of what the bulls are doing and how much strength they have. You want to see that cross back above and those two cross each other. So red down, green above. And then you want to see it supported by the ADX, the average directional index. You want to see this start to move back up. We haven't seen that supported yet by the ADX, but we are getting the cross over here. And I think as long as price holds over here and consolidates or slowly moves higher, then ultimately you are going to see the ADX support this, and that means you could be looking at a much bigger move. And we'll get over the target levels. Well, we've covered the high time frame targets, right, on the cup and handle, but we'll go over the low time frame target levels as well in just a moment. So again, this was for a long time. We've been looking at this level. Long-term diagonal, yes, it got completely front run. Bitcoin didn't quite make it into the bottom, but if you look at ETH did make it directly into that level. It tagged its long-term horizontal over here, and you can expect that ETH is probably going to break out in the same way that Bitcoin did. So it is looking good over there. You tag the 200-day moving average, and so far that's looking like a high time frame high low. Your pivot levels. So here's your pivot level. Basically for Bitcoin, if you do have your parallel channel drawn to the downside, which also doubled up as not only a parallel channel to the downside, but it also was a bull flag, right? Which started to get a bit overextended. The flag really went on for a long period of time, and we've now broken that. You don't want to see price come back into that flag or it becomes incredibly bearish. If you see something like that, then welcome to Nuketown, because it's going to go down very, very hard. All these people that panic bought in are going to panic buy out or panic sell. Can't panic buy out. Panic bought in, they're going to panic sell, and that's going to send price down quite aggressively. And then your support is going to be that 200-day moving average over there. What about Ethereum? Same thing. Ethereum's pivot level is coming in at 1734. So eventually, again, this probably also breaks out, and then you'll be looking for any retest that might come into this region. Let's just draw that straighter into this region over here at about 1850 as a support zone. So that's Bitcoin, that's ETH. Again, reminding you the pivot level on Bitcoin is 26,974. So hold that level, and prices will continue to go up. I actually just want to quickly bring something up over here before I continue. I just want to remind you all, I try and make things crystal clear. Look at me there, I'm live on Twitter. Can you believe it? I try and make things crystal clear. These videos that are playing live, like now on Twitter, I usually go after the show to the video and I do a write-up. So if you look at yesterday, what I said over here, I said bears take control by holding price under 26,200, meaning that bulls obviously have control. So only if they send price under that and hold it below that level do bears take back control. And then I said in the short term, if price goes to 27,400, I believe there's a good chance of rejection there. That did not happen. It shot straight through. I'll show you that on the levels. But then if there's a consolidation above that 27.4, means bulls will likely charge price up to 28K. We've now got that. And a break through that 28K and closing a high time frame candle there will give bulls serious advantage, shifting the entire high time frame structure. That's what's taken place, right? So this final part has taken place. Go through to my Twitter. Make sure that you follow me there because I do give you updates and I try clarify everything so there's no confusion from the show. Cool. Let's look over here at Bitcoin on the 4-hour time frame. So what I'm liking over here and I want to see, firstly, I told you this was a no trade zone for me, this whole area. I wanted to see price get through this resistance first and hold above there. That's exactly what's happened. Once this takes place now, what you're going to probably see is a cross between the 50 and the 200. And that's going to start to look good, right? You're going to get a golden cross over there. And then who knows how high price goes over here. You might just continue ripping into the 30K region. But eventually, there will be a pullback, right? And that's where I'll be looking to really load up on spot positions. So that pullback that comes down nice and safely into support, which is going to be the prior resistance. Remember, this whole area was the prior resistance over here. This is going to be flipped into support. But not only that, you're going to have a beautiful golden cross, which is going to add additional support. And it's just a much safer trade entry, right? Yes, you lose a little bit of opportunity cost, but in the long run, when you keep doing this on repeat, you make so much more money than what you would by going kamikaze style, where you just kind of just try and buy every absolute bottom and sell every absolute top. So this is what works out for the long term. Okay, here we have Bitcoin price on the hourly chart. So these are the levels that we were looking at for quite some time. We said price was range bound and I was really targeting this area as a liquidity zone. So long from this region, once you deviated back into the range, long off that candle, held it all the way up and you basically had bull flag after bull flag, big push up. And now you might see the same thing. Of course, the move is starting to get overextended, but it could go a little bit more. You might push all the way towards the range high, which is coming in at 29,989. That should line up more or less as well with May's high, and expect major resistance over there, and then probably a pullback. And then when the market cools off, that's where you'll be looking to gain your longer term entries. Short term trades, guys, it's moving a bit too quick to really make a determination for a short-term trade. I can't give anything that's safe and doesn't have a high probability of wrecking you at the moment. So just hold off on that. Check out the Discord. The Discord, as soon as altcoin trades drop, we'll start to drop those in there. We'll drop the trade setups in there. Okay, let's move on to the liquidation levels. Liquidation heat map, all red, suggestive that obviously it's all shorts that got liquidated. Look at the big spikes towards the downside. Now, oftentimes when that liquidation takes place, that's right as the shorts capitulate on their positions, then price usually moves the other way. You know exactly how it is, right? So you buy something, you hold, nothing happens, it never moves. The second that you sell that coin, it just shoots up to the sky. It's the same thing. Guys, short, they hold underwater, they're in so much pain, they get liquidated. As soon as they get liquidated, boom, price comes back down. So keep an eye on that. That is also supported by extremely high delta on the bull side. So cumulative delta over here with longs. Look at this, guys. I mean, you can't even see the last time there was red over here. It means that everybody has just completely aped. What price did most of them ape in? Well, if you look over here at about 26,700, there was a lot of them that aped in, but now more people aped in over here at this 28K into resistance than what aped in before, where it had more support and more reason to jump into the market. So interesting. FOMO buyers usually never get paid. They get paid in the very short term, but they don't get to hold their profits for very long. These profits probably get taken, which is indicative that you probably will get that pullback, which lines up with what I showed you on the 4-hour time frame, a pullback into the 50 and 200 EMA, and that's your opportunity to go long. Liquidation levels, not much on here. We need to wait for more price action to unfold. It's not really giving us much. And if you look at the spreads over here, so the cumulative volume delta of the futures and the spot, what I find interesting is that this move didn't have that much buying, right? Look at this. The yellow line is the spot. Spot have been selling off completely, selling. There's been a little bit of a tick up over here, but nothing major, and a bigger tick up that happened on the leverage traders. So leverage traders have been the main cause for this big break of resistance, which is fine. I mean, that's great as long as they can continue to hold that, and as long as the spot traders, which is the yellow line, start to support this and chase the leverage traders, then it would be looking really, really good. So we need to hold up here. The bulls need to hold up over here for this trend to continue. And this is that's a break of market structure, right? So if you look again at the weekly time frame, let's just quickly go back to that weekly chart. Where is it? This one over here. There you go. That is finally a break of structure. We said once you cross that $28,000, you've broken the structure. Let's see how the week closes over here. Basically, what you're going to be looking at to gain an entry over here is one of two things. Either it's going to consolidate within this region, which is where you're going to gain your new entry, or there might be a further push up and then at a later stage, a deeper pullback to form another higher low, maybe something like that around 26,800. So again, I will summarize all of this on Twitter. As I just mentioned to you, at the end of the show, I go through to Twitter and I summarize everything. So make sure that you check it out on Twitter, and then also click on the link in the description below. If you are in the US, right, and you've been trading on BitGet, which is over here. Here's BitGet. Where's BitGet? I don't see. Oh, there's BitGet. Is it there? There we go. If you've been trading on BitGet and you signed up using a US VPN, unfortunately from today, you won't be able to trade there anymore, which is why I do recommend that you check out CoinW. Here's CoinW. If you click on CoinW, you get up to $10,040 in sign-up bonuses. And you also, if you deposit $100, you'll get $40 for free on each deposit that you make. There's no VPN or KYC or anything that's required with them. You can withdraw up to $4,000 a day. So here it is. There you go, 15% trading refund on your first 7 days of trading. So for your derivatives trading, this is the place to go. Otherwise, for those of you who are still trading on BitGet, I love BitGet. It's my preferred exchange. Unfortunately, it's just for the US guys who can't trade there. Guys, do me a massive favor. Smash the like button, hit the bell notification, and make sure that you are subscribed to the channel. And it's a good day, guys. It's a very good day. The market needs some liveliness over here. I will see you all on tomorrow's show, and hopefully we'll find some entries. Have a great day. I appreciate each and every one of you. Cheers for now.